Q3FY22 earnings conference call of Kansai Nerolac Paints, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anirudh Joshi from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Margaret. On behalf of ICICI Securities, we welcome you all to Q3 FY22 and 9 months FY22 results conference call of Kansai Nerolac Paints. We have with us the senior management team of the company, represented by Mr. Anuj Jain, Executive Director, Mr. Prashant Pai, Director Finance, and Mr. Jason Gonsalves, Director Corporate Planning, IT and Materials. Now I hand over the call to the management for the initial comments on the quarterly performance, and then we will open the floor for question and answer session. Thanks, and over to you, sir.
Thank you so much. Good morning, everyone. Greetings to all of you. Since this is the first meeting for this year, so happy 2022 to all of you. And welcome to this Kansai Nerolac investor call for Q3 of 21 and 22. During the third quarter, our top line growth was around 13.1%. Quarter continued to witness inflationary pressures along with volatility, crude and exchange rates. Overall inflation has been unprecedented, which we have been talking in the earlier quarters also, and the situation has not eased. In view of this situation, we continued our approach of balance between top line and bottom line. Just to give you some highlights related to our business verticals, industrial, the automotive growth was hardly marginal. In passenger vehicle, though there was a demand recovery, but the demand could not be serviced due to continued shortage of semiconductors. Two-wheeler segment remained subdued, mainly because of rural stress, and so there the demand was lower. Commercial vehicle was better, but tractor segment also was sluggish. In terms of our focus, we have been focusing on technology, which basically gives environment and efficiency benefits to our customers apart from finish. So to say that we have been working on from the conventional solid system to the medium solid system. So that's what we have been concentrating upon. In the area of non-auto industrial business, which we call performance coating, there we have taken a direction of shifting our mix from lower end to high technology products. So there are a lot of epoxies, alkates, where the inflation has been so high and the margins are very, very low. So that's the focus. We wanted to take our technological advantage into that area also. Some of the achievements are like in performance coating, we are now a approved supplier of Trans-Harbor Link and Coastal Freeway for our C5 system. C5 is basically a fluoropolymer based system, which gives the life of say 15 to 30 years on the steel structures. In coil coatings, where we made entry a few years back, and we were supplying only to the roofing systems, and that was also not a good profitable area. Now we got approval from the appliances. So all of you must be knowing that we are quite strong in the appliances through our powder coating system. And now we got the approvals and started supplying in the appliance because the product requirement is very, very specific. It's like a 360-degree sheet, which need to be bent. So we are able to develop that product and get the approval on that. In powder coating, also the focus is towards the premium category, and one of the achievements is that we started supplying to one of the leading construction equipment company who has set up the fastest robotic line, no manual intervention at all, and we have developed customized specific products, and the products are approved. In this area again, that in drums and barrels where we are a strong player, but drums barrel external coating. So we have got approval for the internal lacquers also. And we have been working with our customers in the entire auto and non-auto areas related to inflation and price increase, which we discussed earlier also. And now we are able to get average around 18% increase in industrial segment. When it comes to decorative, the volume growth is high single digit, value growth is double digit. Demand was better in urban towns. It is lower in the upcountry. So to that extent, it's a contrast if we compare with the last year, where the demand was better from the upcountry towns. Some of the key actions what we have done in decorative, we continued our focus on differentiated products. The approach what we have taken is a problem solution approach. So first product which we introduced in that area was Beauty Gold Washable, which is now present across the country. So this product is a good finish with the washability, and that's a problem and solution approach. We introduced Mica Marble Stretch and Sheen, which is again a good finished product along with the no crack property, because that's one area identified as a consumer need which was still not serviced, and that's the solution what we have provided, and this product is being expanded to the other markets. We also introduced one rapid set product in the range of our construction chemical. So typically in the areas where the winter the temperature goes down to 0 degree or 1 degree, and during those days when the construction activity is happening, the setting time of concrete and the cement goes up from say 6 hours to 12 hours. With this rapid set, which is like an admixture which goes into concrete and cement, the setting time is reduced to the original level of 5 to 6 hours. So that product is also introduced. We also introduced sealing emulsion in some markets, and we also announced the launch of Nerolac Impression Kashmir, which is getting into the market now. This is also this product is Impression Kashmir, and why it is called Impression Kashmir, because it's a good combination of beauty and purity. So it's antibacterial, antiviral. It has generally there are products which are launched in the exterior for the dirt pickup, but this has a dirt pickup property in the interior. So normally in the interiors when you do cleaning and there's a lot of dirt which goes and gets settled on the wall, so this product has the capability to resist that dust. So some of these are highlights of the new products, and because of these reasons our new product contribution is going up consistently, and this is helping us increasing salience of emulsions also. So our emulsion salience has gone up. Within the emulsion, the growth in super premium category. So we divide our categories now into super premium, premium, and popular. And in the super premium category, the growth has been higher. So that's also a good sign, and I think that's getting reflected from whatever data we read that there is a case share recovery, and in the premium segment, I think the story is good and intact. There are more products in pipeline in the coming quarters. That's a part of our strategy that good problem solution approach products we should be introducing. Also, what we have done is that we have increased our activities on the painter engagement. We have introduced the Pragati app for the painter, and we were doing migration from the manual disbursement to the digital disbursement. So it is gradually picking up, quarter on quarter basis it is picking up. Our objective was to have a quick settlement of incentives, because we do offer loyalty bonuses and incentives to the painters, and generally the disbursement used to take a longer period of time, and now with this introduction we are able to give the disbursement in 2 hours time, which is the quickest probably that what painter is getting now. This is for the big painters. Also for the small painters who get the incentive disbursement to the dealers, there also we have provided facility on our Sathi app, which is meant for our customer dealers, and through that even those dealers are able to get the disbursement within 24 hours time, and therefore they are able to disburse to the painters, to the smaller painters also with a good speed. Distribution increase is continue to be in double digit. It's a direct increase in the distribution, which is in double digit. And project business, because this year, maybe last year, business got impacted in the metro cities, and there was a pent-up demand. So the project that pent-up demand has come back in this year. Earlier, we were not going good or so strong in project business, but it has picked up for us in Q3. In new businesses, I think we have introduced the range which is required by the market, whether it's construction chemical or wood finishes. So most of the product gaps are already filled, and we have already caught up with the market growth, though on the low base and our salience remain low, but we have caught up with the market growth. Overall salience of the new business is also going up. And in decorative also, we have taken a price increase which is more than 20% in the YTD level. Most of the increase was taken in the third quarter, and third quarter also it was towards the later part of the third quarter. So focus in decorative continues on paint part, because there are a lot of new businesses that are getting added. So in the new businesses, we are primarily focused on CC and wood, but paint, the new emulsions, distribution, so that remains our focus. Subsidiaries, all subsidiaries did well, barring Nepal, where there was an impact of COVID in the last quarter, and where the growth was negative. But otherwise, all other subsidiaries have done well in terms of top line growth. Bottom line, there was a stress in all subsidiaries because of the inflation, and the story what is there in India was true for other subsidiaries also, where the pricing is taken, but the weighted impact so far is low, and maybe going forward it will get reflected. Some of the other highlights are like, the product mix is better, material cost reduction initiatives continued, and our judicious overhead management in place, our continued focus on that remains. We are Great Place to Work certified for 2021. We have taken several digital initiatives across customer facing and the backend for the purpose of enhancing our efficiencies and process adherence, which will definitely help in the long run. When it comes to our employees, more than 96% are vaccinated fully and all operations are normal. There are certain supply chain logistics challenges, but we are able to manage that, and we have ensured that our customers' supplies are not interrupted because of any supply chain issues. Also, one of the good highlights is that KNP is rated in the top quartile of S&P ESG index in CSA 2021. Also, we are rated in top quartile in manufacturing space and number one in paint sector by CRISIL in ESG Companion. So it's good news for us. Coming to financials, the quarter 3, in terms of EBITDA, there is a degrowth of 28.5%, and for the PAT, the degrowth of 34.7%, and on the 9-month basis, in terms of EBITDA, it is 11.4% down, and PAT is 13% down. So these are some of the highlights for the quarter 4 outlook. January, February, I think that because the third wave, so impact seems to be limited. Numbers are coming down, but January and February first half, we expected that maybe the demand could have some impact of that, but that would be for the limited period. In the industrial segment, the shortage of semiconductor continued, and because anyway the additional capacities which are getting created is a little long term, so that problem may continue. Maybe to some extent it will get mitigated, but that may continue. So that's the situation. Inflation continue to still rise, so there is no ease in inflation, and especially in the industrial area, we still see that month-on-month basis, quarter-on-quarter basis, the inflation is still going high, and therefore the pricing is what we have taken is still not able to mitigate the inflation. We need to go for more price increase, and that is how we see that how we are able to make a progress in the coming quarters. So this is from my side, and now we welcome the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Thanks for this opportunity. Sir, I wanted to understand the price increase impact across decorative and industrial. Now, after this 21% increase which was taken in December, crude has also moved up. Would like to hear your thoughts on whether we need more prices increase in decorative. And the second question which is linked is industrial, the difference in price increase is only about 3% or so. So decorative is 21, industrial is about 18. Would that additional 3% be enough for industrial margins also to come back to normal, or the cost inflation basket is relatively different and hence there is much higher need which will come, and by when do you expect that? Thank you, sir. If I can.
Yeah. So in decorative, the 21% price increase as of now probably has mitigated the inflation. And generally what happens, like the crude prices are going down, but we are more dependent on the crude derivatives, and there is always a lag. So as of now, in the near short term, we feel that this price increase is sufficient in decorative. But industrial, there is a big gap. The inflation is very, very high. the material inflation is higher than the consumption inflation, what we have seen in the last quarter, and therefore the need of the price increase is further higher. And as I said, in industrial, because most of the products are in the solvent category, the inflation is further going up on a month-to-month basis. So there the price increase requirement is definitely there, and accordingly we are pursuing our customers. Though we have taken a good increase, but I think we are pursuing our customers, and we have to wait and watch at how and when we are able to get it.
Sir, and in that one, if I may just to follow up, it is fair to see, argue that, all your initiatives, the non-auto is where the return to normalcy should be faster than the auto, because you did highlight that auto semiconductor issue will.
Yeah, in non-auto, if you are talking about the top line demand, the normalcy is faster, because in auto the demand is not much issue. Issue is related to supply chain logistics, while in non-auto that issue is not there.
We lost this line, so we'll move to the next question. Before we do that, we would like to remind all of the participants, if you wish to ask a question, please press star and 1. The next question is Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah, hi sir. I have a couple of questions. My first question is, I may have missed that what is the volume growth in your decorative and non-decorative in this quarter?
So volume growth, as I said, in decorative is high single digit, and in the other segments, the growth is lower.
Okay. So, sir, in that context only, if I look at, say, some of the peers, in this quarter, your overall demand scenario was quite good. Even most of the quarter was normal. So, any particular reason that our volume growth is lower than the peers, say, from not only this quarter, say, from the past many quarters, say, last 1-2 years?
Yes. So, there are like two things I would say. One is, that it all depends on the mix, market mix, business mix. So, one factor is, like we said, new businesses, that where we were late starter. As we have caught up with the growth, but our salience is low. So, on the higher salience, that if they're still getting the good growth in the market, that is one advantage. The other is that, traditionally, our strong markets are the upcountry market, you can say rural or upcountry markets, and we are not so strong in the urban markets. So this year, if we see the growth in the urban market is quite higher if we compare with the upcountry market. So that's also a disadvantage we have. Third is, that because, as we said, our approach of striking a balance between top line and bottom line, we have not been much focused on the economy segment, and there are also the differences there. So these are some of the reasons, but having said that, maybe they have done better.
Okay, and sir, as you said, in the economy segment, Kansai has been weaker. But how has been the trend in the last 2-3 years, say, Soldier or some of the other products which we launched? So are we trying to bridge the gap, and how far we have been successful in that?
So Soldier has done good. In fact, we have been able to establish a good additional distribution structure through Soldier. And we started with the economic product, but in Soldier also we started moving up now, and the attempt is to see that how do we upgrade. So having established the distribution, there also the story is about upgradation, and the growth from the higher range of the product is something which we are trying to gain better than the economy range.
Okay. So my second question is on the margins, because our margins are a multi-year low. So would it be fair to presume that the margins are bottomed out?
So as I said, that again in our case, because we are a very good blend of decorative and industrial, and quarter on quarter that mix also changes. So there are like festival periods where the decorative salience goes up, then other period, the salience of the industrial goes up, and in industrial the volatility or the inflation is still going up. So I would say that in decorative probably what you are saying is yes, because no one knows about the future, but as of now one can say yes. But industrial, I think the situation still continues to be going up. Okay.
So that is pretty helpful. Just one bookkeeping kind of a question. In our results, there's a notes to the accounts, which is a 6 number. And it states that there was some trade deposits which were written back of 34 crores and 41 crores in 3 months and 9 months. And there is some incentive which has been, you can say, written back. So can you throw some more light on these two transactions?
So I would request Prashant to answer that.
Yeah. So you must be aware that we have got machines which are placed in the market, which is virtually goes given free of cost. But generally, what happens is that some trade deposit is taken against that, and that is returned to the dealers, provided they complete the targets. Now, these write back is pertaining to such dealers who have not completed targets. Now, if you look at other companies, normally they do year-on-year basis. We had deferred this write back for some time, so that is what we have taken this and corrected to be in line with the peers. As far as the second incentive, what you have seen in the note is the incentive from the state government. Now, we have our plant in Lote where there is some incentive available towards expansion. So that is that incentive which we got, and that is not a write back. It is the actual approval given by the state government, which of 9.8 crores, which you have got it. That's the only difference.
Okay, so the second one seems to be related to some GST, etc.
So it's like this: whatever investment you do in that plant, and whenever you make sale from that plant, the SGST collected against that is allowed as a refund.
So I think, sir, this will be a recurring item going forward then?
Yeah, it is. It's not a big amount. The total sanction, we got part sanction now. Another sanction is expected maybe in the next 6 months.
Okay, but this is not something which will recur for, say, next 4 or 5 years something.
No.
Okay, sir, regarding the first part of your trade deposit on the tinting machines basically, so which now you have taken back. Now, what will happen, for example, if those dealers, if their deposits have been taken by the company, so will they go out of the system, or can they, you can say, take some action against the company, anything on that front?
No, nothing of that sort, because this is not. This money belongs to the company. Now it's see, as I told you, they have not completed the targets, and which they are aware, and there is a clear-cut understanding. If the target is not completed, the amount is forfeited. The part of the agreement.
Okay, and sir, this amount is on how many tinting machines this amount has been forfeited, or how many dealers, if you can share?
It's small amount, big amounts, all put together. It's a number of machines. It is, so it is accumulated over a period of 4 or 5 years. That is what has got been created.
Okay, thanks a lot, sir.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sorry sir, my line got dropped. I just wanted to kind of check on that industrial part again, just to follow up on that. Would it be fair to say that the non-autos is where you expect a faster recovery in gross margins, and autos will come with a lag, given because you pointed towards chip shortage issues likely to take some time?
So in terms of demand, it is yes. But in terms of inflation, as I said, industrial, whether it is auto and non-auto, there the inflation continue to increase. So in terms of margin, we'll have to wait and watch, because the inflation is still higher.
Okay, sir. Sir, I know it's a little bit of crystal ball gazing, but by when do you expect, things to start normalizing on the margin front? I understand it's not something that will be hold on to, but your expectation would be better than ours.
So very, very, very difficult. We don't know what is going to happen. So it's very difficult to comment on that.
Our guess is as good as your guess.
Okay, sir. That's all from my side. Thank you very much, sir.
Thank you. The next question is from the line of Amit Purohit from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. Just one thing on the distribution expansion. You said double-digit growth in distribution. Can you help us with the count? And second to this is the markets where you are, is the strategy is to get into new markets or existing market where the salience of the new expansion is higher?
I didn't get your second question.
I said, where is the salience of the expansion higher, whether it is in our existing strong markets or into new markets?
Okay, so distribution is, when we say 10%, because our distribution was around 27,000-28,000. So there's over the year. So as of now, we're talking about YTD December. So over a year, it is 10% increase on that particular base. And it is across. In fact, the growth in our weaker market is slightly higher, which is south and west.
Okay, thank you, sir.
Thank you. The next question is on the line of Mihir Shah from Nomura. Please go ahead.
Thank you for taking my question. Sir, I just wanted to hear your thoughts on, are you seeing any impact of the sharp price increases that we have taken in decorative, especially in the bottom of the pyramid segment? Because you've also shifted your strategy towards focusing on the premium end. While two different questions, but if you can share both, throw some light on both of these basically.
So logically, if we speak about, what we keep reading and, when we look at the K-shaped recovery, and I think there is a lot of data which is floating which says that in the higher end, the income has gone up in the COVID period, while at the lower end, there is definitely a dent on the, pocket of the population. So from that logic, there should be some reduction in the demand in the economic category. But having said that, in paint probably does not get reflected so much because the penetration is lower. So if you look at FMCG or staples, where the penetration is very high, so there is a direct implication of this kind of thing. While in paint, because the penetration is lower, and even if there is some increase in the penetration, that compensate, the dent on the demand. But otherwise, we do feel that there should be impact on the economic demand. In the premium category, the story remain intact, and there, in fact, we feel that the growth will be better.
Understood. So there is no real, reason or interplay for shifting strategy because of this, or you have consciously shifted because you're expecting demand to be impacted going forward, and or you're seeing some signs of that basically?
So it's a part of, I think, earlier also we discussed that we have worked on the new strategy where definitely we are putting more focus on emulsions and this kind of premium products. It doesn't mean that our focus will go away from the economic, but that the aggression in terms of growth would be on these kind of categories. And for this year, as we said, because of these reasons, the growth in the market is also expected to be better. But it is a long-term strategy, and whenever the growth in the economic category comes back, anyway we have the range available. So depending on the market response, those things will vary. But our area of focus would be into the premium range of products.
Understood. The reason why I'm probing on this, sir, is that earlier also 2 years back, we probably entered the economy segment quite late after seeing the growth in the at the industry level was far higher in that place, and then we had lost some kind of demand because of that. So again, while we always wanted to focus on premium end, we had to shift strategies 2 years back because of the shift in industry, and again we are shifting the strategy back to premium end. So I just wanted to check on that. But okay, I'll take this offline. Yeah. The other question I wanted to just check with you on. Can one assume some of the future demand has been preponed as individuals were sitting at home and painting is a planned activity, so when they thought that they will start going back to offices, let us get any kind of work done, and demand can probably see some kind of a moderation going forward as opening up happens. Your thoughts on this point, sir?
So just to quickly respond to your earlier question also. So it is not a shift in the strategy. It is not that gradually we are changing that. What happens is that we are a national player and the entire range player. So therefore we are there in the entire range. What we have done with the soldier is that we have created a base, we have created a right distribution. Now, once you have created a base, thereafter you can decide that every year that how much aggression you want to showcase on that in terms of the growth. Otherwise, the base is already created. Now, in the typically today's scenario when the inflations are high, the market growth is higher on the premium segment, and also when there is a stress on the margin related to inflation, I think it makes sense to go a little more aggressive on the premium kind of thing. Otherwise, that in the normal situation, when the situation come back to the normal, one has the leverage to see that, both the categories, because at the end of the day, in the premium category, you do invest more in terms of marketing activities, while in the other categories, it is more of a expansion of the distribution, which is team-related expansion of the distribution. So that's the difference in these two kind of things, and therefore, some kind of modifications, depending on the market situation, is what we look at. So that's the first part. The second part, that we have no insight, like, what you're saying that the demand is preponed. We only feel that, that whenever this COVID impacts and, maybe to some extent the painting activity gets deferred, and then in the coming months or the coming quarters, it can generally come back. So we have no understanding as of now that there's any preponement because of people spending a lot of time. That's a change in the behavior, we can say, because people are spending a lot of time at home, so they are becoming more conscious in terms of doing painting or doing a better painting. That's the implication of that.
Understood. If I can, turn the question a bit, how much of pent-up demand do you think has been, addressed or satiated? Any insights on that? Any research that throws up on this insight, sir?
So not really numbers is difficult to comment upon that. But one can only say that whatever demand was there, I think that is catered, and maybe some drop, which is the last part of the December or January, that may get addressed in the coming months, because as the situation improves.
Got it. Understood. Okay. And lastly, on the other expenses line item on the P&L, so we would have taken a lot of cost initiatives during the pandemic, and maybe certain other costs that were getting postponed or deferred, or not. So, like for example, travel and so on. Can one assume most of the cost is back, and this is like a normal steady state expense run rate that will continue?
You can say that, but travel and all still was not the complete year. So to that extent, you may find in the area like travel, business travel, that may still go up in the coming period.
Yeah, what we saw in the third quarter maybe is what I'm trying to ask.
Yes.
Got it. Okay, thank you. That's all from my side, sir.
Thank you.
Thank you. The next question is from the line of Keyur Haresh Pandya from ICICI Prudential Life Insurance. Please go ahead.
Thank you. Sir, three specific questions. Let me take one by one. So first is, as you mentioned that one of the reasons why our volume growth is lower than industry peers is because our focus is on more on, say, premium and super premium, and not so on, say, economy segment. But that impacts our volume growth, but shouldn't that positively impact our gross margins versus peers since our mix is getting better? So just your thought on this equation.
I think you see some kind of improvement on the sequential basis. That is one. Second, what is happening is, as I said, in the premium category also, there are a lot of new introduction of the products. So typically, if you see that earlier market was there with the smooth finish, now there are sheen and glossy finishes. So on the unit basis, the margins are good, but in terms of percentage, if you look at some of these new categories which are coming up, in terms of percentage, that could be lower. So that is how the situation is.
Okay. Second question is on automotive volumes. So at least from the auto players, the commentary is coming that sequentially the situation is improving, say, month after month, if not, say, this quarter versus last year's this quarter, or in any period. So rather than year over year, sequentially situation is improving. Do you have a different view from that? And what kind of indication you are getting from our clients?
I think sequentially, yes, because obviously they are able to manage it better now. The capacity constraints of semiconductor is there, but they are able to manage it better. So I think we agree with the view that sequentially it is better.
Okay. So when you say normalization will take time, so you are comparing with a specific year or a specific period?
So we are comparing what we keep hearing is that demand versus supply. So there is still a gap, because if you look at the passenger vehicle, the booking period is still quite large, and also the availability of the semiconductor is still not enough, because I think they are dependent on the additional capacity which is getting created, which is generally take about 2.5 years of period. So as of now, it is 1.5 years past. So to some extent, the supplies are improved, but it is not back to completely normal, and therefore we feel that it will take some more time to come back to their natural demand, and that they are able to service the demand.
Okay, understood. The third question is on client additions or our client list in electric vehicles, either four-wheelers or two-wheelers. All the emerging players or the current large players. So what is our penetration in the electric vehicles, both two-wheeler and four-wheeler? Are we present there?
Yes. So mostly, that in the electrical vehicles, that most of the companies do not have their in-house paint shop, and therefore, that they are getting it painted through the ancillaries, and most of these ancillaries we are present.
Both two-wheelers and four-wheelers.
Yes, both.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Chanchal Khandelwal from Aditya Birla Capital. Please go ahead.
Hi. Thanks for taking the question. Firstly, what is the cut in the advertisement expenditure you have done in the first 9 months?
There's no cut. So there's some increase in the advertisement.
Sure. Given the context where the competition is going to heat up in the decorative, I mean, there is Grasim which is coming, there is 2 more players who are planning to enter this. How do you feel your market share has been in decorative, and what are the steps you're doing to further increase the market share? Any thoughts on this line?
Yes, so decorative is, as I think I mentioned in one of the questions earlier also, that the approach what we are taking is a problem solution approach. To that extent, the starting point is the product, and our focus has been introducing differentiated product, which we started with 1, 2, and now we are there with 3 and 4 products, and more products in pipeline. That is first part. The second part is, in terms of our marketing, we are doing activities around consumer and activities around painter, because when it comes to decorative painting, one side is the consumer, the other side is painter, and some of the initiatives which we have taken, which I earlier spoke about. So that would be area of focus. And third part is the distribution, because the more distribution you have, more accessibility you have with the customers. So we have a large infrastructure, more than 100 sales offices, warehouses, and therefore we can cater to a larger number of distribution through that. And the distribution, for getting more distribution, obviously you have to ensure that how fast you are able to liquidate your material from the dealer shop, and therefore for getting that extraction from the counter, you need to work on the demand generation, which is related to a painter, because painter also play a big role, and also related to a demand for the consumer. So these are some of the activities which we are working upon in a disciplined manner, and therefore we feel that we must continue to work on this particular strategy, and as we keep getting results in terms of increasing demand and getting the distribution numbers in place, we would be able to achieve our objectives.
Sure, sir. So just on the first point on the product basket which you are trying to increase, do you have putty and construction chemical? Because that is one basket which others are trying to do. And also on the distribution of enhancement which you spoke about, the number one player spoke about adding almost 45,000 distributors in last 18 months. He has added hardware dealer or paint dealer. He has gone very aggressive. Given that competition is hitting us, why not we also go in an aggressive manner in terms of distribution expansion? The two part to the question.
Your first question is for putty. Yes, we have putty, and that's a part of our economy segment where we have not been aggressive as of now because of the current situation. Construction chemical, yes, we started, and we have caught up with the market growth. The entire range is introduced in the market, and we are getting a good response. We are making a good growth in construction chemical. On distribution, what I spoke, double-digit growth of the direct distribution. There is no indirect distribution here. And what you are comparing is with the direct and indirect distribution. So there are a lot of new businesses which are added, in construction chemical, adhesives, where there is a lot of indirect distribution. So as of now, I'm not talking about those numbers. When I said double-digit direct distribution growth, it is, you can say that, better than the market growth of the, increase in the direct distribution.
Sure. Just lastly, there was an article in the media which said that you are planning to buy an office space. Any capital commitment you are doing for the office space, and any plan to sell the office location which we currently have?
Prashant, can you answer this question?
So this office space we have purchased, yes, we'll be moving out over maybe over the next 6 months. Right now, there's no plan to anything on this current place where we are.
No, so if you are moving out to the office space, this land becomes vacant, right? If I'm reading it right.
Yeah, so the thing is, we wanted a space where we can, because what has happened going for, due to this new working norm, a lot of space is vacant here. So we have wanted to shift to a place where we can accommodate the number of people who will be attending in a smaller place. So that is what we are taking.
Yeah, but this office space you may sell at some point in time. Is that what I'm just trying to understand?
No plan related. No plan.
Okay, thank you.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. My question is that if we assume that over the next 2 months, the price of your products as well as the input prices remain constant at today's rate, in that scenario, will the Q4 gross margin be higher or lower than the Q3 gross margin?
I hope what you said is right, but it is not the reality. So even in the month of January, we are seeing a higher inflation.
Yeah, but you would also be taking price increases, right?
Yeah, but generally what happens is there is always a lag, because you are always carrying an inventory, which is a higher price inventory. So that impact also will be there.
And the other thing is that some price increases that you would have taken in Q3 would not have fully affected Q3, but they will fully affect Q4. So therefore, just trying to understand that in Q4, do you expect the gross margins to sort of recover from the Q3 levels, or do you think there is some further downside likely?
So 2-3 points. See, one is, as I said earlier also, that quarter-on-quarter basis, there is a mix change. So since we have a very good mix of industrial and decorative, and October to December, generally what happens, because of the festival period, the contribution of decorative is higher, which in the coming quarter, the contribution of decorative is lower. So that can affect, because the margins are higher in decorative if you compare with the industrial. The second point is, what you have said is right, that whatever price increase we have taken, that was factored partly in the last quarter, partly it will get factored in the coming quarter. But new point, which is related to a mix change and also the further higher inflation, will have some impact on that.
Okay, so basically there is a possibility that Q4 gross margins may be on the lower side compared to Q3, right? Am I reading that correctly?
I just said, what is the reality, this, you can read whatever you want to read out of it.
Okay, understood. And in terms of your distribution expansion, etc., just wanted to understand, are you sort of expanding, and I'm sure that you are doing both, but I want to understand where sort of the focus is a little higher. Are you expanding more in your already markets where you are strong, or are you expanding in sort of relatively in markets where your market share is relatively weak as far as the distribution expansion is concerned?
In distribution, the objective is always state basis, because generally you look at what is your numerical reach and what is your weighted reach. And even if, say, in the stronger market, you have X percentage of numerical or weighted reach, and we have a target of X plus something. So accordingly, that we will decide that, maybe we want to add, for example, 100 dealers there. But when it goes to the weaker market, there may be the increase in terms of number of dealers could be a little higher. But in the weaker market, we always look at the quality dealers, which means the weighted reach. While in the stronger market, that where our market share is strong, we go for the numerical reach. So in terms of number of dealers, that you may still find that they are little higher in the stronger market because it's a numerical reach. While in the weaker market, we look at the weighted reach. So numbers could be lower, but the impact is higher.
Right. So what I would do, sir, is not look at the absolute number of dealers added, but the percentage of addition. So obviously your base is larger in this thing in your strong markets. So on that higher base also, you think the percentage addition would be higher than the weaker market?
Yes. It will be higher than the weaker market.
Okay. Understood. That's all from me, sir. Thanks and all.
Thank you.
Thank you. The next question is from the line of Lakshmi Narayanan from ICICI Prudential AMC. Please go ahead.
Yeah, thank you. So my question is that, what are the important initiatives you have taken in the last 3 years and which has actually resulted in success? It could be on across various fronts. It could be on branding, it could be operational, or it could be getting into new segments. While there's always business as usual, like appointing distributors, etc., what are the top 2 or 3 important initiatives which you actually taken with a long-term mindset in the last 2-3 years?
So, the first part is in the area of technology and service, where we are continuously working to get some advantage, that in terms of providing a product which are very, very different, understanding the problem in B2B and B2C and how we can, provide a better solution to that. So, because technology is our strength, enhancing the services level, because for the long run it is, very, very important. To give you an example that if you see last 2-3 years, the number of products have really gone up. In decorative, earlier there used to be one finish, now there are multiple finishes, matte, semi-gloss, sheen, different variants are coming. And typically if you find that dealers have a limited space, warehouse, and most of the dealers, majority of the dealers will not be able to expand, especially in the bigger town, they will not be able to expand their space. So therefore the service requirement goes up. So this is one area of initiative where we are continuously improving on that particular part. The second part is ensuring that our customer satisfaction index is improving, which is also related to services or settling the dues, those kind of things. So that's another area. And from there it goes to the, as I said, demand generation, because if you are dealing with the customers, for them, especially in the decorative area, what is important is the return on investment. So how much demand you are able to generate, which is a function of how do you increase the demand from consumer. Fortunately for consumer, in fact, our brand is quite strong. We have a very strong mind share. So as of now, what we are working on the painter activities, painter engagement, where we are able to convert the demand into the conversion area. So this is related to a B2C. And in B2B, our strong forte always has been technology, service, and capability to ensure that whatever product we supply online, that that is completely okay at the line, because the different line conditions have a different kind of humid conditions, climatic conditions, and therefore there is always a challenge that how the product is working at the line. So that kind of service network we already have in place, where we have the capability to see that that line functions smoothly. So these are the areas which we have worked upon.
But sir, on the B2C thing, right? What any drastically a different approach you have taken to increase your reach, or I mean, it could be not just a number in terms of expansion, but something which you have actually changed the way in which you looked at say 5 years back and now.
See, it's like one point is product, because product is always a starting story. So slowly, if you look at say 5 years back, maybe all companies, all products are similar price point, which is not the situation now. There are many products where there is a complete differentiation in terms of the proposition and in terms of the pricing. That is first part. The second part is the channel. If you compare the last 5 years, the channel was a regular channel, hardware channel or paint channel, where the typical approach is that somebody goes, whether it's a painter or customer, you go and buy the product. Now the change is that there are segmentations which are happening within the channel, and there's a new generation coming of the dealers, and they are not really comfortable with the old kind of setup. So therefore there is an initiative in terms of ensuring we have a preferred partner model, and every year that we are adding numbers, and going forward that we want to add more numbers on that. The third part is that the painters that where painters get attached to the dealers, and painter also look at that what kind of demand generation or the additional leads can happen. So there is an initiative around digital marketing, where you generate the lead and ensure that lead gets connected with the painter and the dealer. So it's like an entire process which is going through a transformation or the change process, and that is what we are seeing, and that is what is being done because all these digital initiatives along with the the physical model, the connectivity of that is making the differentiation. So processes are getting changed.
Got it. Thank you.
Thank you. The next question is from the line of Jignesh Makwana from AMSEC. Please go ahead. Jignesh from AMSEC, your line has been unmuted. Please go ahead with your question. We would request you to unmute yourself from your handset and ask your question. Due to no response, we'll move to the next question, which is from the line of Jay Kumar Doshi from Kotak. Please go ahead.
Yeah, hi. Thanks for the opportunity. No, see, I think, one of the view or, there is a common view on the street that Nerolac, Nerolac's decorative paints business gets impacted when industrial coatings business goes through a challenging phase. Now, I've not tracked the previous cycles, but when I look at the past 2 or 3 years, I noticed that, since the time auto slowdown commenced, in CY20 and CY21, there was a sharp cut in advertising spends. So if I look at CY19 BARC data, maybe Nerolac's media spends were comparable to Berger. Today, when I look at CY21 same BARC data, it indicates that you're spending a fraction of what you were spending in CY19, and today perhaps those media spends would be much lower than the number two player. And again, when I look at growth rates also, I think there is some evident market share loss. So I'm unable to so is this assessment correct that, there is a effect of, weakness of industrial or challenges of industrial on decoratives at an organization level in terms of the budgets, the way you plan about growth?
So I'll tell you in two, three parts. So one is, typically what happens is that if we look at the paint purchase cycle and how it works, so first is the mind share, and then you try to convert that mind share into the market share or the market sale. So when you look at the period what you're talking about, yes, we have spent higher in terms of advertising or increasing the consumer demand. And once you reach to a particular mind share, then and if that mind share that is good, then you try to bridge the gap between the market share and the mind share. And that gap can be bridged with that when the conversion happen at the distribution end, at the painter end. So and therefore in that situation your focus shifts to rather of creating the further mind share, ensuring the conversion part. So to that extent, that we have reduced in terms of advertising and spend more in terms of painter creation or the distribution creation. That is first answer. Second is that maybe last 2 years also the advertising got impacted because of the COVID reasons. Because for 4 months, 5 months, 6 months, there was no point of advertising. To that extent also it has come down. And when it has come down, even in this year, if you see, maybe we have cut down on the advertising because for a large amount of months, we felt that it may not be necessary, and therefore what we spent is more on the market activations, local market activation, especially related to a demand generation through the painter and dealer part. And third part, what you're saying is, as I said, that depending on the situation, some kind of balance, between the top line and bottom line, one has to do. But as I said, more in the area of economy range of products, because these are like commodities, basically you give more incentives and then you can get more sale. So there, even if you have a short-term loss in sales, it is not something which you cannot try to get back. More important is emulsions, that which is definitely consumer oriented, and there if you are able to maintain your sale and able to increase your salience, that is something which is long term. In the economic category, one can always modify the approach depending on the situation.
Understood. This is helpful. And, as you think about your business from the next 2 to 3 years perspective, do you intend to compete across the segments, or you increasingly going to position yourself or focus more only at the premium end of the portfolio?
So, generally you see what happens is that since our the advantage is what distribution, and then therefore whatever distribution demand you have to provide the entire range, and we are entire range players. So therefore that availability of the entire range would be there. But when it comes to the focus, obviously the focus is never on the entire category. The other category move with the focus category. So there in fact we'll be very very focused on few categories of product. I will not take the name, but few categories of product. But they are obviously as a part of the emulsion. So the product which has a differentiated propositions, has a differentiated price point, there we would be spending more of our resources in terms of providing the focus on those products, and other products get tagged along with that.
Understood. So you will not, unlike the market leader who has taken a very conscious call over the past 2 to 3 years to aggressively sell putty, economy emulsions, construction chemicals, even something as sort of a 10 rupee per kg price tile adhesive. So you are clearly not going in that direction. That is the right understanding. correct?
So in terms of range availability, all these ranges are available with us.
Available, but you don't want to sort of just capture revenues or volumes, by aggressively pushing it out.
No, as I said earlier also that, these products are commodity products, and as of now, we are not participating in that kind of discounting on these products. And it always goes with the time. When the time is right, you can decide that, how much you want. But otherwise, at this situation, yes, we are not going into that.
Thank you so much. Thanks for your responses.
Thank you. The next question is from the line of Vineet Prasad from Investec. Please go ahead.
Sir, just wanted to come back to the point where you made a comment regarding new generation coming in as far as dealers is concerned, and they're moving on to the preferred partner model. Can you just elaborate on this? Is this a case where we are moving towards exclusive dealerships, or it is a case where they would stock all multiple brands but still focus on a particular brand? How does that work?
Yeah, so it is basically a change in selling approach from the dealers, because there are market and dealers who are more dependent on the painter purchase, and there are market and dealers who are more dependent on the consumer purchase. So wherever there are consumer footfalls and the shop conditions are not so good, so in this model, that you provide a good amicable kind of ambience at the shop and provide certain demand generation activities specifically for the counter, and therefore your focus is to sell more of a premium product, because the more product that which offer the benefit to the consumer, and therefore we train this next generation people who are capable of taking this particular thing. Otherwise, in the past, conventionally, people sell the product, but they don't sell the benefit of the product to the customer. So these are, we call it next gen preferred partner dealers, that where we train them that what are the benefit and how you should pitch the product to the customer rather than just selling at the price. Concentrate on the benefit and what exactly the customer is looking for, and if you can provide the solution. So it's a win-win situation. Customer gets the answer to what he's looking for, and in the process, the dealers also manage good margins. So it's a win-win situation. That is how that we are taking this approach.
Understood. And is this an approach adopted even by other brands, or it is only we have started this over the past couple of years? How the scenario is changing?
It is something, the thing what I'm talking about is very specific to us, but maybe in some other manner they may have taken this particular direction. But, we have a clarity in terms of that how many numbers, identified numbers. It's not something like open available in the market where anyone can get into it. So we identify the counters, where the footfall of the consumer is good, and then, getting specifically into it. And therefore, it's not as of now, scale up numbers to whatever extent, but taking this approach, and as we keep making a progress on that, then appropriately, gradually, we scale it up.
Understood. So, thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Jignesh Makwana from AMSEC. Please go ahead. Jignesh Makwana, please unmute yourself from your handset and go ahead with your question.
Am I audible now?
Yes, you
Hello.
are.
Yeah. Thank you for the opportunity. Yeah. So just one clarification on the volume side. You said decorative witness a high single digit kind of volume growth, and industrial witness a low single digit kind of volume growth. And if I assume you took almost 20-21% kind of price hike in decorative, 18% price hike in industrial segment. Even if I'm assuming that you haven't factored the entire price hike in the Q3 itself, some weighted average price hike, and assuming the 60-40 kind of revenue mix, I think the growth which reported on a standalone basis, that math is not telling up. So am I missing some element over here?